All right, good people, let's get right into it. Welcome back to Stock Up with Larry Jones. Hit the like, subscribe, and notification bell right now. All right, the market is selling off. If you're new, make sure that bell is dingling, that it is all. Put it on all notifications. Market is selling off right now, and there's one lead reason why it's selling off. Tell you why it's not selling off, and that was the FOMC meeting. That was in the Fed's decision. That's not why the market is selling off today. There's a big news story. As a matter of fact, every time after an FOMC meeting, I always say we need 48 hours to decipher what the market is trying to decipher on what the Fed just said. Okay. And so here we are again with these news stories. And today it's Oracle and AI and OpenAI. That's what's moving the market. Plus, now we have some loose mouth feds disagreeing with the Fed. That's what's moving the market today. All right. Chicago Fed Goldsby came out. He was one of the outliers that said no. He was one of the two that disagreed with the Fed cutting rates. And on top of everything else, that's what's moving the market. Okay. And so let's go right to the main story. And that is Oracle pushes back several data centers for OpenAI to 2028, Bloomberg News. So they pushed it back from 2027 to 2028, good people. It's not like they pushed it back 1,000 years. It was just 1 year. And why did that bring the market down? Because people are afraid. They are afraid that it's too much, too quick. And all you're going to hear now is AI bubble, AI bubble, AI bubble. Okay? And we could see, I'm looking here, I see Bitcoin is down to 90K. That happened before this news really broke. Down about a 4%. Ethereum is down almost 4%. So everything is down. So now I want you guys to listen for yourself what's going on, and we'll discuss from there.
Hey, Carl, this is in regards to OpenAI's $300 billion deal with Oracle. Reportedly, Oracle now, some of the data centers for OpenAI will be delayed to 2028 from 2027. Now, that's according to Bloomberg, attributing the delays to labor and material shortages. Separately, there's a new 10Q that was filed from Oracle that actually shows more data center leases from the company. A credit investor I spoke to tells me that this number increases the likelihood of Oracle going to the debt market sooner than expected. The estimate was halfway through 2026, according to people who follow this company. But now this credit investor says it would likely happen earlier next year. I reached out to Oracle for comment. We are looking at shares of Oracle trade lower once again, down 5% after losing 10% yesterday. And we've been seeing this interesting correlation between the stock and the credit default swap, which is once again moving higher today. So keep in mind just how the story involves not just the move in the stock, but what the credit story, how that's influencing where the stock is moving. We'll keep an eye on this one, guys.
So we could see Oracle right now. It's down let's call it 4.5% today. You see a sharp drop again, right? Right after the news really starts circulating. And then you could see over the last 5 days, we've been down a lot. Just look from right here. Look at that. December 10th. From December 10th, it dropped 14.63% in a day. That's what's happening. If you look at Oracle, it has been sinking over the last month. And that is just ramping up a lot of fears left and right. A lot of fears are just going on. You know how it is. It's a knee-jerk reaction. That's what I think. It's a knee-jerk reaction, right? So there's another story going on, and I want to get to that before I go in deeper on this sell-off. Here's another hot story for today. Trump expects to sign executive order to reclassify marijuana as soon as Monday, sources tell CNBC. All right. We could see what's going on with the weed stock. So here's just a few names that came up. You could see these are some some sin stock. All right. We got cannabis. We got Aurora Cannabis. Here's this Labs. And, I'm not familiar with all of these companies, but here's another one that's up 44%. Here's another cannabis that's up 50%. And they are running up on this news that the president is going to be relaxing, these cannabis laws, all right? 61%, 19%, 72, 54. I'm not in any of these stocks, and to be honest with you, it's not anything to do with any religious beliefs. These stock, we've been through this with the last 3 presidents. Actually, especially the last 2 presidents, we've been through this same thing where they pump, they pull back, they dump. They pump, they pull back, they dump. People have been waiting on this, type of movement for the last 10 years. Now, it could take off from here. This could be it. This really, really could be it. And they could take off. I'm not interested. If you make money, hey, I'm happy for you, right? Now, let's go back to the matter at hand.
What if people start to really panic or jump out of the AI trade? Or is it possible they're just taking profits on what has frankly been a very good year?
I'm hearing from investors, there are people that are nervous, but I would just go back to where are we coming from? I mean, we've had a massive move and we've rallied substantially. Jumping out of windows, I think the dynamic here is that there's a lot of money that's been pushed into the trade that's somewhere out 3 years. What we've heard over the last couple of days is we don't really know what the margin profile is going to be. We don't really know if some of these customers. Jay talked about the debt profile. That's thrown a different light on even, hyperscalers, the Mag 7s. Absolutely. That at least have suddenly they were free cash flow machines, but suddenly they may not be. Mm-hmm. That means these things might trade at a different multiple. But I think if you're running too far away from Google and Meta, I think even NVIDIA, I understand that that's the more central part of, are their margins going lower? And if they are, then this stock might not be as cheap as it seems, because right now in valuation,
right,
it's not Broadcom.
Times, right.
Yeah.
This is what I want to show you. These are some of the things that are moving the markets, right? Now you have Feds that are coming out. I'm not going to play this, but Goolsbee, all right? Chicago Fed right here. Chicago Fed Goolsbee, uncomfortable with front-loading rate cuts, assuming inflation is transitory. Transitory is another big word for short-lived, okay? Temporary. That's all. Temporary. They use transitory. All right. So Chicago Fed Goolsbee, he was speaking Friday. He spoke again today. Now you have all of these descendants, these loose Feds that are coming out, especially the 2 that was against this rate cut. They are coming out and voicing why. They may be right. They may be wrong. He's not on the president list for the next Fed president. The president wants someone that's going to cut rates like it's going on sale, right? Which is not good for the country. It's not good. It's not good because if you overcut, inflation spikes back up. So it is a balancing act. Do I believe the Fed should cut more? Yes. I think the Fed is about 25 basis points behind. I think we should have had a 50 basis point cut in the last 2 rate cuts. I think one of them should have been 50%, all right? Or it's not 50%, but 50 basis points, okay? And I've been upfront with that based on everything that I see. So let's look at some of the things that are going on. I charted this morning not knowing that this is going to happen. We got the SPY, and we could see right at open and bell, it started to sell off, right? My people in my money moves, they get these levels, not every day, but occasionally. And we see it ran down. It hit this mark, it hit this mark, and hit this mark. So if you were looking, if you were with me this morning when I was live training, I was doing live training on options, you could have made money, and I know some people did. That's the SPY. The Qs, which is tech heavy, we did the same thing, right? It never broke up above pre-market high. It dropped down to this level, dropped down to this level, dropped down to this level, and could have been coming down to this level. As you can see, volume steadily losing strength, right? And so that's what's going on with those. You could have made some money with that too. Same thing with Tesla, good people. Same thing with Tesla. We gave you guys the marks. We gave you guys where it could come to. What did Tesla do right out of the gate? Ran up, hit this mark, ran up, hit this mark, ran up, hit this mark. So you could have made money on calls. Then it turned around and fell right back down here, right? So you could have made money going up, could have made money going down. All right. Learn that, good people, in Stock Up You. I have a full options course. We train you how to chart. Okay, we train you. Coupon code LEARN. Still going on. Don't let it expire. Once it's gone, it's gone. Now, let's go back to what I think is the overall sentiment. What I think is happening. I think a knee-jerk reaction is happening. I think that this is too much, too quick. I think it's an overreaction. Larry, can you assure me that the fall has stopped? No, I cannot. But I do think it's too much, too quick based on this news that they are moving data centers back, the opening of data centers back 1 year. And we see what it's doing, right? We understand that sometimes these companies go in too much, too quick. You know, Walgreens, Starbucks opened up too many stores too quick. Still good companies, but they opened up too many stores too quick. And then what happened? As a result, they both started to shut some down. Okay, still operating, but it was too much too quick. Oracle could have done this, but even if Oracle did, that does not mean that all of AI is at the top of a bubble. I don't think so. I think this is too much too quick. We will see what Monday brings. Now, I cannot sit here and tell you Monday will be green, but all I can tell you is I think that this is a knee-jerk overreaction. That's what I think is happening today. Now, when all of this news finishes, we could see that the NASDAQ literally tanked even more than it is now. Look at that. It was down, the NASDAQ and the Dow. The NASDAQ was down almost 500 points. We've regained some at this time. I'm shooting this an hour and 15 minutes before closing bell. So you let me know, what did you do? I did do some buying, and it was just ETFs. You know, there was one stock I believe I mentioned in Money Moves, but it was mostly ETFs, and I shared it, my price points, and when in Money Moves. Okay, Money Moves is my Discord, which is solely held on WAP. Okay, Stock Up You is the class. You use coupon code LEARN, and Money Moves is where you see all my plays, and I do live options training right now. Okay, good people, you have a good week. Don't let this rattle you too much. Look for opportunity. Look for some long-term opportunities. And I do believe, like I said, some of these PEs are too heavy. Now, I know some of you young bucks come on, you saying it's never going back. The whole game has changed. Yes, the stock market has changed drastically since 2020, but PEs, they still exist. All right. And they still count. And whenever we have fear in the markets, the companies with ridiculous PEs are the ones that get smacked the hardest. Just look at it, good people. We'll see you Monday. Have a blessed and wonderful weekend. Live, love, laugh, and learn.